Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Thursday, the 6th of May, 2021, 6:40 p.m. Central Time. No matter what I'm going to say right now, it doesn't matter. Why? The markets decided that tomorrow's jobs data report is a big report. And when markets make that decision, you have to decide, how do you want to go into them? Do you want to go into them? And how is the market going to react to them? The market seems to have baked in 1 million new jobs. So 1-1 would probably be bullish, and anything 900,000 under is probably going to be considered bearish. The reality is anything in that type of range is bullish at the end of the day, but it's a degree as to what the market is baked into it. It's going to impact the metal markets, it's going to impact the bonds and notes, because the number from there, traders will start talking. Is it inflationary? Is it price pressure? Why did they get so many people to come back and not? You're already hearing that all over America, people are offering bonuses for workers to come back. There's a point to cut the support programs that we have in for workers when it makes it too easy to stay home. You know, when I grew up, we used to have the projects in Chicago, and part of the problem was it was a way to put problems out of your mind, and people lived in it, and it became a way of life. I don't think we should make a way of life that people are supported by the government if they're, how do I say this? If they're fine to do their work. That's the word I'm looking for. Certainly there are always cases, and I accept that. But we're paying so much that some people are saying, hey, it makes more sense for me to stay home from the government than it does to go out and drive a Lyft, an Uber, whatever. That's the wrong thinking, period. Okay? How they work it out, I'm not a politician. All right, I'm just a lowly trader. So as we take a look at this market now, we can see on the weekly chart of the S&P, you're still up, and on a weekly chart, you're up about 0.5% for the week. So it's not like the market is running away to the upside. The press, every time you get a new high on TV, here's a new high. I mean, got to understand what announcers are paid to do. Get you to watch that TV. They're not going to sound boring. They're going to sound exciting. Otherwise, they're gone. They also have to be intelligent, and the vast majority are. When you look at the chart, though, you're not making new highs. You're in an area that the market's trying to figure out what to do from. It threw out tonight a pattern of higher lows, higher highs. That's bullish. Now, we haven't had that for a while. We've had it just wishy-washy, and suddenly that happened right in front of the report. And where's it happening against? I know that you hear me say this all the time, but that's because I created a course on it. It shows itself all the time. The 18-day average of closes is the line in the sand. It's where markets often go to figure out what next. I don't know that we know what's next until we get through tomorrow's jobs data. Then I'm going to be excited about these markets. So you can imagine I'm going to be doing a lot of work tomorrow. The trend is up until you take out 41, 40, 50. The bias is up since you're over the 18-day average. The resistance is the upper Bollinger Band at 42.13. I believe that would be a new high. And momentum is overbought. This is a dangerous chart setup. You may not think so. You know, I'm sure there are going to be people to say, oh, this is going to do that. These narrow bands means you're in chop city. And that's often what happens. You get chopped around in there. Will we get a surge right after the report comes out? Probably, one way or the other. The algorithm traders will take over. But that dies away, and then you got to see, does the market have what I call legs to it? And we'll find out. In the NASDAQ, the market is trying to stay within the Bollinger Band. Come on, that's what I tell you over and over. The trend is down. You are now in a market that is alleviated tonight being oversold. I don't know what that means for tomorrow. But if you take out 1366, 65, let's call it 1367. Okay, 66. Then you negate the downtrend. I don't think anything there starts an uptrend, but we'll worry about that tomorrow. You're ahead of yourself in the Dow. It is the strongest of the markets. We've talked about it. It's overbought. It's trying. Remember, we've got to take off today's action. Both numbers were not over 80. The first time they're trying to do it is right now for Friday trade. You got to get several days in a row of that to embed. But the bias is up. The trend is up. Overbought. If it embeds, a whole new world starts to the upside again. That's how I'd be viewing it. In the Russell, this is more similar to what we just saw in the NASDAQ. Lower highs, lower lows. The market made its run today. The low was 2198.80. The Bollinger Band's 2194.90. You can see how close they are right here. But it's made its run. Now you got to wait to see, does it finish it up? There's two levels of support. If you were to take out here 2261.10, you negate the downtrend. Are you going to stay chopped in here? I think you are. And that's why I call this whole thing, other than the Dow, which is the strongest, Chop City. In the VIX, you had that one blow up to the upside. Look at how it settled back. Now, normally when that happens, the interesting thing is you make another run at the 18-day average. Let's see if that happens. I think it is going to happen. Obviously, the jobs data is going to be everything tomorrow. Now we get to the 30-year bond, which is overbought already. Yeah, you got higher lows, higher highs, but you formed one of these patterns. It's important to learn this pattern. And I teach this in my new enhanced Bollinger Band course. If you haven't taken it already, and there's been a lot of you that have taken it, it's going to open your eyes up as to Bollinger Bands, moving averages, and momentum. And it just focuses on the Bollinger Band. You have to understand what a Bollinger Band is before you take this course, because it's like getting a doctorate degree, in my opinion, in it. You're going to see things, you go, whoa. My traders will, if you know anybody that's a subscriber, they're going to tell you what has been going on in the trade recommendations we've been putting out using these. I don't want to tell you. Find somebody that is. In the 10-year note, you have a market that is overbought. Okay, resistance, the upper Bollinger Band, trend up, and a major report tomorrow. You know what I'm going to be doing. I'm on holiday until tomorrow's report's out of the way. You think I'm kidding? I am not. Lower low, higher high, failure at the 18-day average, coming back, but you know everything's going to rain on that report tomorrow. I'm waiting. And it's the flip-flop in the euro. You had a market with a higher high, lower low, back up over the 18-day average, but running into the resistance of the 100-day, support at the 18, momentum going flat on you. Come on. If you can't read that this markets are all waiting for this, be careful. The British pound tried to turn bearish today. Yeah, bearish. I haven't said that in a while. Lower high, lower low, but it's closed over the 18-day average. It never got to the point where it can stay under it. That's the only thing that was missing on it. Where's the battleground? How many days do you want to hit that 18-day average to see what the market's going to do? Momentum is slightly pointing down, bias up, trend down. Now, you have an outside day today. Whoops, let me come back to that chart. That was my fault. You have an outside day down. If you take out the high of an outside day down within 2 trading sessions, so Friday or Monday, the odds are strong. Doesn't mean it has to happen. That my work shows they're strong, that you're going back to the closest moving average above the market or the Bollinger Band. There's the band. So I'm waiting. If the market heads down, support's back down here, you already have the swing line down, so you got to keep your eyes on all this. Bitcoin, battleground, 18-day average of closes. Momentum still up, trend up. Market's having a great problem staying and getting over and closing over that 18-day average. So this has become its problem area. Okay, I get that. The difference between Brent and WTI, I've said Brent is on fire. The Saudis have done the best job I've ever seen. They figured this out. They took oil off the market. They drove it up near 69.96 yesterday. It is still in an uptrend, but it is very overbought, difficult to trade. You know what I say, when you hit that Bollinger Band, the pros take money off the table. Same in the WTI, overbought, first challenge of it right up here. I think they took their money off. The trend has been up. Same in gasoline. I'm the biggest bull you'll run into in gasoline. And I get it. You hit that band and you're not embedded. So you put this all together, you come up with the game plan, and that's what I want you to look at. I want you to look at this ad, understand the game plan that I'm trying to give you. If you watch me on a regular basis, learn from this. Take a look. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.